So, welcome back, or welcome. This is the agent, equity agent here. I kind of just was kind of interested in trying out different mediums of going about and presenting data, economic data to the people, or even just gathering it for myself and my own sake of journaling. And I found myself purchasing a podcast microphone this weekend. So I went ahead and just wanted to try and set something up where I'm just gonna talk about a few things heading into this trading session. We're in week 29 of um, of the year, and I wanted to kind of just go over some things that I'm seeing. Um, That's actually hilarious because I wrote out a thing last week 29, and I'm seeing it right now in front of me in my Notion. So I'm gonna go ahead and duplicate that, right? And then try and see if I can take some notes based on what I'm seeing here in current price action, right? So you know, I'm doing the opening 30s. I'm also on Twitter. I'm very, very active on Twitter. Um, the equity agent. And my Twitter handle is at equity agent, literally. And you can follow me there if you'd like. I also am I'm also on TikTok, which is more so just my name in that realm. But um, but yeah, I think I'm gonna keep testing out different avenues of how I want to journal and want to present data to other individuals. And I think this would be a cool test. I don't know all in all what I'm even aiming for, if that's a thing. I just say I'm more so experimenting at the current moment, right? Trying to find what fits within the groove, what fits within my time constraints, and also what would be the most productive and what's the most fulfilling, right? Like, where am I gonna get the most value out of it for myself, as well as the individuals that are listening to this. I don't even have a headset on right now. I don't even know how well or poor I sound, and we're just gonna go off a whim and kind of just hope and say that it does sound good. But it's currently 1 a.m. Tuesday, and we're looking at the market. And I think we should start with what happened today. So mainly what happened today was we had some earnings come out, and the banks started off the earnings pretty strong. They basically came out and said, you know, I figure I should probably do that away from the mic. Sorry. But they basically came out and said, hey, we're not necessarily sure on current macro conditions, but we're sure about the uncertainty, right? So what we're going to do is we're going to true up our reserves in case of this uncertainty becoming much more tumultuous and maybe leading to capitulation, if you will. And what I think that did a lot, right? What that did was that basically said that, we're all confirming that we don't know what all is happening, right? But we know something is gonna happen, something more at least, right? Because we still don't know in totality what will come from this. So earlier in the day, the bank earnings weren't too bad in terms of guidance, or at least that's how the market took it, right? Or at least how the market processed that information. Goldman Sachs warned that they're going to slow hiring and cut expenses. And they reported a 48% slump in quarterly profit as well, which ended up beating the forecast, right? But despite this slump in deals and other, people kind of looked at it like it's a positive, and that's what rallied earlier this morning, if you will, or if we saw some strength, at least, that held up the price, right, up into this, that held up the S&P up in this 3,900 range earlier this morning. And then also there are some specific sectors of the market that have been getting a lot of love, right? So Goldman also states that shares rose because of the global markets unit that they have. Houses, it ends up housing their trading desk, right? And those trading desks jump about 32%. Right, with fixed income, commodities, and trading revenue surging about 55%, because hey, we're in a scenario where the markets are volatile, and in those individuals that are at Goldman Sachs trading desks, they for sure know how to take advantage of this volatility. So they've been seeing this, and people are being a little more optimistic with what they've presented to us. And yeah, we can kind of do this same analysis when you're looking at Bank of America. So they beat profit beats, and saying that its consumer unit was offsetting the deals drying, which is basically the same thing Goldman told us, right? And what ended up happening is that it seems like Bank of America's net interest income, which was what jumped the most, which is so it's saying that the interest earned from loans jumped the most, and that may or may not be a factor of the rising rates, right? Because rates did only raise in the last 2-3 months or so, so it wouldn't necessarily be super impacted. At least I wouldn't think so. But they're saying that their interest income jumped about 22%, so 2.2 billion in total, to 12.4 billion. Sorry, so it jumped 2.2 billion, which is the 22%, right, to the total of 12.4 billion in the second quarter, and the bank is expecting some more. The company's profit overall fell about 34%. But hey, the market took this as growth, and they kind of held on, right? But then the big heavy hitter came near the end of the trading day, right? And it says that Apple is planning to slow hiring, based on the next year's scope and their growth and the potential economic downturn, right? There's a growing. Also, I remember a few months back there was an issue with trying to even find talent, because companies such as Meta and Tesla were also like aggressively hiring. So now to hear that these companies are kind of switching over, if you will, and kind of immediately putting the pause on this, right? And this goes for Goldman. This goes for Apple, right? But a few months ago, it was, I believe, Vimeo and Cameo and what other, like, more startup, based companies that mentioned layoffs. And when you think of it, like, you can see how that trickle down effect is starting to come through, starting to permeate through the entire economy, because individuals that were, already like super forward looking in their growth and super forward looking in their expenses, knew that they had to make this cut almost immediately to try and stay afloat, right? And now not only are those getting affected, But now the more sustained businesses, the more robust businesses such as Apple and Goldman Sachs and the like, right? They're starting to say to themselves, maybe we should do the similar scenario. So if that doesn't give you some confirmation as to what's happening right now, and the overall, you know, I guess you could say the consensus that there is no consensus, or the consensus that we are certainly experiencing some economic uncertainties, right? That was probably a mouthful. And yeah. So what ended up happening is and I'm sorry, one moment. But what ended up happening is basically, yeah, sorry about that. But back to what I was trying to say, which I don't necessarily remember, but okay, I got it. All in all, to try and say, like, as you can see, it trickled through the economy, right? So from the companies that were super forward looking in their growth, all the way to the companies that have grown to these big monsters such as Apple, and you know, a lot of people are very concerned right now as to what may be happening in the future with the with all of what's going on because of the uncertainty. Yeah, and it's going to be pretty interesting few months coming up. I personally don't necessarily have, you know, much of a viewpoint on this right now, only because, or well, like two reasons, right? I don't necessarily know um what comes from an environment like this. I've never experienced in a high inflationary environment where we have so many uncertainties. I've never experienced it, at least, yeah, never experienced it, one. And two, within my trading career or my finance career, it's not so like visible, right? It's not so easily pinpointable, if you will, to try and see like how things overall are going to be looking. So um I would like to say is I'm highly skeptical, and would like to keep it in that realm, and I'm just playing things by ear, day by day, waiting for more confirmations. As I've told some of my TikTok fans or individuals that are following me there, that like, you know, I'm waiting for more data to come out, right? More and more data to come out to try and find some certainty somewhere. We're getting GDP data soon. I believe that's end of this month. We're also probably going to be getting Fed sometime soon, to see if they're going to raise rates or tighten rates even further, right? And see where that goes. If that's going to help maybe tame this inflation or tame the demand that's currently getting passed through. Not necessarily sure, but hey, let's get into the charts a little bit more of this sector, at least this agent. But let's get a little bit more into the charts. So, like I mentioned, I kind of talked through today's price action, which is basically this sector here, right? Yeah, so this was pre-market, early market, boom, 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 and then we did a little dance, and that was kind of where I wasn't really interested, and then we sold off. Seems like we started from about midday, we started to sell off. And again, it was triggered because of Apple being such a strong company deciding to say, hey, maybe we should slow down some growth in hiring. And if you've read my articles in the past, or if you haven't, I highly suggest that you guys read History Repeats Itself. It's a little bit of a notion article that I wrote up. Basically, I'll read a little excerpt here for you guys, actually. Let's see. So, in Mark Twain's The Jumping Frog, he states, "A favorite theory of mine that no occurrence is sole and solarity." And oh my days, that's solitary. Jeez. But is merely a repetition of a thing which has happened before and perhaps often. So let me say the quote again. "A favorite theory of mine that no occurrence is sole and solitary, but is merely a repetition of the thing which has happened before and perhaps often." There is, very hard to present something. There's times very hard to present something completely original, because as time continues to tick on, some iteration has occurred within this universe, and it only becomes infinitely harder as more time continues to pass. Right? And if you were to take those few concepts, or just a few phrases that I have in this article, and I may end up rewriting it into a different version itself, but where history repeats itself. But as you could see here, where price action was earlier July, right? We're approaching this 3910 band up here. You start to meet some pretty strong resistance up here, leading to some indecision, as well as the ultimate, downfall of what happens, down to where, roughly about where we are currently trading at 38.30. And that's something you could say that also recently happened here, where we came up and we bid up. We didn't necessarily, lose strength off the bat, but we did get a nice rejection here up in the 39.10s, and we dropped heavy. We dropped about that's 137, 140 basis points, which is most certainly enough of an opportunity there to place some things. So let's just take a look at the current market state, the current geometry of what's going on, and kind of start from there. So if we look at the daily, right, and I like to look at the daily, you're not going to see much there. We have this long-term trend that we haven't necessarily needed to use because we're not really there quite yet. But we're somewhere there, right? We're as we start to get rejected here, that also kind of shows me like where we're prior, right? So if we focus on this trend where we're going up here, bouncing, where we were prior, dropping through that, coming back up, bouncing, finding some like resistance and support range, and then coming back down to that, right? So we're kind of, if we were to compare our current phase in this total long-term trend from the end of December to now in the S&P, we're potentially here, right? In comparison to where we dipped off earlier at the mid to end of March. So in all reality, we have, the fundamental data points that are giving us information saying, hey, things are necessarily getting better. We saw a 9.1 print in inflation, the highest of years, I believe, like four decades, I believe was the headline that I saw. 42 years of inflation, like never reaching this current bound, right, or this current height. Met with several confirmations of economic uncertainty and not necessarily where things are going, right? And not to be all doom and gloom in this scenario, right? I don't want to be that. I would hate to be that person that only looks in one angle, but that's the current reality of where we are, right? But do know this: when that story is done being told, right? When the doom and gloom is over and the sun starts to peek out and the rainbow starts to form a little bit, this market will rally. It will rally, and it will rally strong, right? And like I mentioned, I'm not putting a time frame on that. I'm just saying that as we go through these and we see our trends and we look at all multiple time frames and different analyses, we have to be aware that that good times come as well as the bad times do. So just keep that in mind with everything, right? With everything. But yeah, so we continue to approach this 4 hour. The 4 hour is kind of showing some potential double bottoms here last week that I was kind of interested in. And that was super nice because we caught a piece of the rally up. Thinking maybe we could break through this top portion here of the double bottom neckline, right? This neckline that comes across here, but not necessarily the case. You can probably get rid of that, as well as this, as it's no longer needed for my current analyses. And you could just start to see that this is just a really big range of probably, what is this? Yeah, about 400 to 500 basis points range that we just kind of been in. And there's like these mid sectors where we've seen resistances in the past and so on. And yeah, and those have been super nice, but it's really just continue to look and see where direction could form. And as of right now, I'd say if we look on both sides of the scenario, if we break below this 38.30, we may be able to see 38. Right? We could see a 30-point drop back down to this range, right? Where we've seen support come across, right? And then also, if we, like I mentioned before, history repeats itself, right? If we look at the last time that this thing broke the 38.30 range, right, in terms of negative sentiment, we see this happen. We saw it spike up, or let's get into a little bit more of a longer or of a different time frame, right? You saw it spike up and quickly draw down. Like, that was 15 minutes, and I believe that was actually CPI data as to why that dropped like that so heavy. That day, that was the day CPI came out last week. So we saw this happen pre-market, kind of giving us where our liquidation levels potentially are. Let's see, right? Where liquidations potentially are. This drop right here. This is about 180 to 100 to 200 basis points drop there, as well as this portion here where we broke through here after reaching these pink circles or pink squares, where I've also designated as history repeating itself, showing that this breakout from this range has led up towards this range up here, the 3880. But that's a whole, neither here nor there. It's a different story, but because we're kind of focused on this current price action, right? So what's happening within this block of movement, right? And we see it happen here. We see it drop all the way down to 3750, right? We've seen it drop all the way down to about 3800, which is currently where I would potentially target if I were to go short in this scenario. We've seen it drop as well and not really go much of anywhere past 3820s maybe, okay? As well as we've seen a bunch of noise. We've seen it potentially try to drop, but no real strong direction, as well as we've seen it drop all the way down and through multiple times. So we've seen different scenarios, and this is more than likely where we're gonna yeah, it was more than likely where we're gonna need to be more patient, right? Yes, after 3830 below, breaking with at least great force, we can see a potential 3800, but we must be patient as well, because we could just be stuck within a range, and that movement or that breakout could be false. So we have to keep those things in mind. But if we look at things from a probabilistic standpoint, right, and we look at the times as where we broke down from 3830, excuse me, you can check and we can see, right, the last time we broke 3830 right here, what did we do? We got all the way down to 3750. So let's just put this color point here. I'll leave it at yellow, right? Great move, basically. It took a while to get there. How long is this? This is like a day and a half of movement of chop, just to then eventually break down a few days later. And then we've also seen it here, where it didn't fully break, but it broke down to where we were aiming currently, right? Where those 30 to 40 basis points. So that's also green. I would consider that. In this scenario, it broke down even worse, right? Basically beyond our target profit, 180 basis points. In this case, we saw chop, right? So I'm not going to give this one a yellow. I'll give it a red, right? I'll give it a red. We saw chop after breaking through, but also it's not coming from this upward region, right? So this came from this down below where it was probably troughed and kind of ran out of gas as to what it needed, that break and that consolidation to continue that healthy uptrend to the 39s, right? And that's another important thing just to keep in mind as to where it came from prior to the level. And then if we come here, we can see last time it broke again here, we got some dancing. We didn't get much love there, so I'll give it a red as well. And then I will also I'll give this one a better score, because we definitely broke all the way down, even though it was a market data point that literally drove this, which was CPI coming out. That's still, good information to have. So if we were to kind of graph this out and say probably like from a probabilistic standpoint, out of 1, 2, 3, 4, 5, 6 of the prior times that it broke, 4 of those prior times it broke and fell at least 30 basis points, right? So we got 66% chance of potentially grabbing those 30 basis points if we just look at this nominally, right? I'm not going to say like, hey, probabilities, and get into the deep math of it, but just a rough sake. And then you say, okay, what's the probabilities of it happening from coming from this range, the 39s, down to the 3830s, and then down again maybe another 30 points, another 130 points or so, right? So when did those happen prior? That happened prior here, and currently so far here. We're in the first leg of that movement. And let's see what else happened if we go out to this. So we don't even have that much data backing this. So we'd have to go back to definitely last year to get more data points. And I'll probably go to the 4 hour and try and see those. But for right now speaking, right, we've got, I can go and put more lightning bolts here just to go ahead and see, like, hey, last time we came here, we got rejected here after dealing with selling. We definitely sold off and dropped another 30 points minimum, right? And same thing happened here. We came here and we definitely sold off. We saw this dancing. We saw this indecision and uncertainty, as well as the support that was there at this 38.30. But then it did eventually fall. So that's two out of that. That's 2 for 2 so far. And then we also saw this in the more recent, right? So from the 8th of July, which is also, when you think of it, it's closer to the current conditions that we have, right? Why? Just because this data is fresher than it is from this end of June point, as well as this end of or mid-June point, and any other point that I may find back here. I don't understand why the 4 hour is not popping up, so I'll just do that instead. But it's going to be most certainly a difficult one. Okay, pushing. Oh no, that's way too high. I'm going to go back down here. So if I'm over here at 39s, right, and I go in, this is March of 2021, and I look at this price action as well, and I say now what to myself? At the 39s in February 21, we were in a completely different market. But even in those conditions, the break of the 39, we've seen the push down. We've seen, you know what I mean? As we've come up above the 39s, maybe consolidated, we've seen it get back down to the 38s and the 38. All right, so let's go back to more recent times and kind of continue to develop on this idea. Right, so we're at a probabilistic chance of we got this one here, and then we have this one here as well. So we're at a 4 out of 6 coming from this level at the 38.30 alone, not picking any singular direction or saying anything. Right, we're at a 4 out of 6, 66%, and then we're at 100% when we get weak at 3900 and break through, and we 100% of the time so far, in the past month at least, we've broken down. So we can then say with some degree of certainty that it's very probable for us to move back down to 37s, to the 3750, 3770s range, right? In the coming days. I'm not saying it'll happen tomorrow morning in the opening 30 minutes. By the way, plug on my opening 30 show. I drop that generally every morning, early in morning. But and you'll be able to find that pretty much anywhere. Following me, Nedrick14 on TikTok, or Nedrick on Instagram, or just the Equity Agent on Twitter. But yeah, so we can kind of look at some certainty and say, hey, if we start to experience some weakness, we could potentially break down through this and get this 80 basis point move, or and capitalize on that. So then my question starts to become, okay, what could be the catalyst for a move like this, right? Like, what would need to happen for a move like this to occur? Like, do we need more data to come out, or what current data are we already expecting to come out that could potentially lead us into that direction, right? So if we look at the economic calendar for tomorrow, we have housing data, it seems. We got housing starts month to month. The market is I believe estimating 3.6% growth, but the previous period showed negative 14.4%, as well as the building permits showing the market saying that we're kind of expecting a negative 0.9% growth, and the last period was negative 7% growth. So if housing seems to potentially come out negative and the market begins to react to that, we can use that as a catalyst to potentially capture these 80 basis points. We also have API weekly inventory data. I'm not too up to speed on those overall impacts of the market. I haven't necessarily seen much recently, at least. So I wouldn't necessarily say that's a big mover. But we also do have earnings. We have Ally Bank, some more banks coming out, right? We have J&J, what seems to be Lockheed Martin, and some other ones, as well as, let's see what else we have. As well as some other information points that come out during the day, because that's kind of just what happens in the market, right? More information gets presented to us as the everyday lookers and investors, and we make decisions on that, and that's kind of just the scenario that we're in, right? So we'll continue to look and see what could potentially be this catalyst to then push through, and maybe we see this drop in the overall market. As of right now, sitting here at 1:30 a.m., trying to look at the overall market, we're not seeing much of that. We're kind of seeing it hold, right? We're seeing it continually consolidate and dance around this 38.30 level, and we also need to be privy as to what could happen on the upside as well. But and we can do the same exercise that we did for the downside on the upside, right? We've seen it dance around this level and then shoot up 90 basis points, right? Come around here, push through. Even this one, right? We've broke down before we continued to make this full move. We've broken down all the way down to this 38.30 level, and then shot back up the following morning, up 80 basis points. Same thing here. Even before CPI data came out and gave us this drop, we saw a pop of this 60, 70 basis points, right? So there most certainly are buyers sitting here, right? And what seems are interested in grabbing this 38.30 range, as it is in the quite literal mean of this range that we're sitting in, right? This 400 basis point range that we're sitting in, and these buyers seem to be interested. So even if I take off my bearish bias hat for a quick second and start to say hey, we've seen this great consolidation here. We've also seen a potential uptick. Maybe some of the earnings comes out and we get more positive news and some of these companies, try to steer away from the doom and gloom and present something good, right? Present something as a positive feedback loop for the markets, and maybe we see a 60-point basis pop, right? Where we can manage our risk, keep nice tight risk, hold down for 38, 32, and we catch this pop up towards the range where we've seen prior resistance, catching about 64 basis points and risking about 26, so a 2.4 RR, right? So this is the agent, and this is kind of some of the thoughts that I have as I look through things, especially from the technical aspect. But yeah, I mean, it's me, and this is kind of my thought process and how I view things. But aside from that, I'm wishing you all a great day, happy trading, and always strive for greatness. Yeah? Peace. Let me see. How the heck do you turn this thing off?